Well, hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague Yatin Mota. Well, Yatin, wish you a very happy Diwali. I think we are anchoring together after a long time. Hope you had a great weekend and a great Diwali, and of course, it'll extend.
We'll celebrate
into tomorrow.
the Nutan Varsha Abhinandan tomorrow as well. So yeah, the
Tomorrow.
New Year also is there, and this is a truncated week. And I don't know why the markets were open on Monday. Because we are shut for trade
I hope
tomorrow.
NSE is listening to this. But yeah, since we were open today, but I would like to point out that somewhat 2080 started on a pretty sparkling note. We saw the Nifty reclaiming that 19,500 mark, but today we lost some steam. In fact, we saw some bit of profit booking coming in, and the Nifty ended below that 19,450 mark, and we haven't moved much since midday. We were around the same levels, 19,450 or thereabouts. But what's heartening is the fact that the Nifty mid cap index managed to stage a comeback from its day's lows. So both the Nifty mid and small cap indices ended the day in the green. I think the small cap index gained somewhere around 0.5% or thereabouts. So strength coming in when it comes to the broader end of the markets once again. Sectorally, most of the sectors were in the red, barring the PSU banking pack. That index saw an up move of 2.5% in an otherwise weak market. You had metals that also managed to eke out some gains. But if you look at the IT and pharma packs, those were among the top laggards in the market today. If you look at individual movers, among the gainers, you had Coal India. That stock jumped over 5% today. Eicher Motors, that was the second big gainer on the Nifty, up 2% or thereabouts. You have positive brokerage views coming in after the two-wheeler maker, in fact Royal Enfield maker, beat estimates when it comes to profit and EBITDA as well as revenues. M&M was the other one. Hindalco, BPCL were some of the other gainers. On the losing end, you had some of these life insurance not doing all that well. You had SBI Life, HDFC Life, these were among the losers. You had Bajaj Finance continues its losing streak. Apollo Hospital and IT names like Infosys also feature on the losers list today. But Yatin, today, BSC once again fired up 10%
Absolutely.
Almost, and quite a few movers.
In fact, Nandita, other movers were there, but let's talk about BSE because that company's market cap has topped 31,000 crores. In fact, intraday it crossed the 30,000 crore market capitalization mark and now trading at 31,000 odd crore market capitalization, new 52-week high. And obviously, the reason here is good earnings for the second quarter along with good market share gains in the option segment. So the derivative segment, I think the investors are hopeful that probably they will garner more market share from NSE. Which has happened already in the past. So probably if there is more market share which is grabbed by BSE in the options market or probably the entire derivative market, it could be earnings move for BSE moving ahead. Obviously, this is about BSE, but Hindustan Copper, that stock also was in focus. We'll talk about it in detail, but that stock moved 8% up in trade, top FNO gainer. Motilal Oswal, CAMS were the other stocks which gained 8% each. What did not do well is Swan Energy. That stock was down 4%. There were several bulk deals reported in trade today around that 428, 430 mark, and nearly 2 crore shares were traded in the cash segment today. So let's see, who were the buyers in this particular bulk deal. Page Industries and Prestige were the other stocks which were down nearly 4% in trade. So some profit taking in real estate stocks as well as some consumption names. But overall, the market was quite strong. Coal India was up 5%, PFC was up 5%. If you look at the mid cap end of the market, we had stocks like CAMS, MCX, Credit Access, Grameen, JB Chemicals, CDSL, Suzlon, all of them hitting fresh 52 weeks high.
Yeah, lots of movers in the broader end of the markets. Of course, BSE all fired up. In the last two sessions, it has gained somewhere around 16% or thereabouts. But
in fact, Nandita, that's if you talk about BSE, I just tweeted out that in the last 1 week, the stock is up 30%.
My God.
And in the last
like a rocket.
Yeah, and in the last 6 months, the stock is up 30%.
3x.
So a massive rally coming in for the stock of BSE.
The company has already revised its buyback price given the fact that it has rallied so much, right?
Yes.
2 times, if I'm not mistaken.
And I don't think so they'll now be able to do much about it given the fact that shares have doubled versus the buyback price.
Right. I think, that's about BSE, but let's take a look at other stocks that were in focus in today's market. Of course, Eicher Motors is one stock that deserves mention. given the fact that the company has clocked its highest ever profit, EBITDA, as well as revenue growth in the second quarter. Numbers beat expectations on all counts. In fact, it's a focus on customization, a wide network, new launches, as well as, increasing exports that have aided the numbers for, Eicher Motors in the quarter gone by. In fact, the stock is, I think, even less than 3% from its 52-week high, Yatin. In fact, if you look at what brokerages have to say, Jefferies has come out with a very bullish target on Eicher Motors. It has a target price of 4,650 rupees per share. In fact, it sees limited impact of competition from the likes of Harley and Triumph. Remember, in July, the share prices were hammered, to say the least, given the fact that there were competition blues from the likes of Bajaj Auto and Hero, and there were concerns that the company may lose market share to these players. But Jefferies maintains that that hasn't really happened, and Eicher Motors has stood its ground. At one point in time, Bajaj Auto had said, slyly said that Hathi mat palo for one of Royal Enfield's bikes, but what, now this Hathi is ready to eke out market share from all the others, and it is in fact stomping on the market share of others as well. So Jefferies talk about this brokerage particularly, it sees potential for re-rating for Eicher Motors going forward. It says that the company will be the biggest beneficiary of recovery in demand and premiumization going forward, and it's a competitive pressures that had made the street become a little cautious on the stock. But once again, since that has not happened, we have some bullish views coming in on this stock, Yatin. And of course, it is pretty much obvious that the stock is well poised going forward, given the fact that it is just about 3% away from its 52-week highs.
Absolutely, and the stock of Eicher Motors doing really very well when it comes to the operating performance as well. But one stock which was the top F&O gainer in trade today was Hindustan Copper. Obviously, if you look at the numbers for Hindustan Copper, they were quite strong in trade. In fact, not only that, the main trigger was the opening up of the tender regarding one Jharkhand mine, which is quite big. Now, let's talk about the numbers first, because the quarter 2 profits surged nearly 3 times from 25 crores to nearly 61 crores. Revenues were up 80%. EBITDA was up 90%, and if you look at the margins, Nandita, on a quarter-on-quarter basis or on a year-on-year basis, strong expansion was seen. In fact, the margins came in at 32% for the second quarter. Now, the real story here in Hindustan Copper is that the company has floated a tender for the mine operator cum developer for the Rakha copper mines, which is situated in Jharkhand. This has been in operational since 2001. And after getting all the clearances from the central government and respective agencies, now the company is looking to appoint a mine developer and operator, which means that once this mine operator is in place, the company will be able to mine copper from these fields, and this will provide a significant boost to the overall profitability as well as revenues for Hindustan Copper. Most importantly, the management earlier said that the total capital expenditure outlay to enrich copper and put up a processing plant there would cost the company nearly 2,000 crores. So I think a significant amount of development coming in for this company. Earlier they had floated a tender, but that didn't work out, and I think this time probably the company is more prepared in order to really appoint one a mine operator, so that not only does it benefit the company but also as a country, because net India imports a lot of copper from overseas countries, and probably under the Atmanirbhar Bharat context, this company would be able to perform at least better from here when once the Rakha mine starts operating the copper mines.
All right, of course, Hindustan Copper shining bright in today's session. Of course, looks like it is poised on a very strong growth trajectory going forward. But let's talk about India's largest insurer then, LIC. Of course, shares were under a fair bit of pressure today. The company reported its numbers on Friday post market hours. Q2 profit dropped somewhere around 50%, and the net premium income also dropped on a YOY basis. Of course, the company has been trying to increase its market share, given the fact that it is increasingly losing market share to some of the private players, and that is of course given the fact that there is stiff competition in the non-par segment as as well. And if you look at the VNB margins, they have also been impacted due to enhanced benefits in annuity products, right? Margins, however, are expected to inch up given the fact that the company is focusing on non-par products going forward, right? But if you look at Motilal Oswal, it has a fairly upbeat view on the stock. It says that the levers are in place for the company to maintain its industry leading position. It believes that valuations at the current juncture for LIC are fairly reasonable, even though it has cut its VNB estimates due to the decline in the VNB margins that it has seen in the quarter gone by, but it has raised its embedded value estimates owing to the fact that the equity market returns have been fairly positive, and it has reiterated a buy rating, target price of 850 rupees per share. But remember, the stock is trading at a almost 36% lower to its IPO price of 949 rupees per share. So looks like there is a lot of ground to cover for LIC going forward, Yatin.
Absolutely, and the company's results have disappointed, and in between that there was a pressure of the Adani Group fall which had come few months back. But I think now net the company is making money on the Adani investments, and more importantly they have been focusing rightly on expanding their overall network and tying up more to do with the financial institutions and banks in order to ramp up the overall insurance distribution segment.
Well, that was about LIC, and those were all of the stocks that were on our radar this afternoon. Of course, tomorrow it's a market holiday, so Yatin will have a good rest, of all the fun, because of all the fun that he had over the weekend. He's pretty tired. So come back and join us on Monday morning when we come back with the markets. But in the meantime, of course, we will have quite a few videos and programming on our Moneycontrol channel as well. So you can tune in for that, and of course, log on to our Moneycontrol website to read, and to be abreast of all the happenings around the world and in the world of finance. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.